After falling 10% last week, Bitcoin's had a rather stable week, hovering around $26,000. But is this the end to the downside? Are the bears going to crash this market to new cycle lows? We're also looking at the SP 500, as it's also had a slight rebound week after falling 2.3% last week. Same deal for the NASDAQ. It seems like the fear came at the bottom, the temporary bottom, maybe the short-term bottom, but nonetheless, the fear has come at the worst time for the majority of investors. It's typically what the media does. Let's take a look at that in today's video and the possibility of how a recession will or won't play out, as most investors are expecting this time to be different. Guys, you know what to do. Hit that like and subscribe button. This is your home of macro cycle analysis across all of the markets: crypto, Bitcoin, stocks, and real estate. We've got the top of the video description. This is your most valuable subscription. It's absolutely free. And we're also going to be doing a sale on TIA Premium coming up. And this is the only place you're going to be able to find out for that. So make sure you are subscribed for when that sale occurs for TIA Premium. You can join our members, crushing their trading, crushing their long-term investing as well, short and long. We cover everything here as holistic investors. 100%, 200%, right here, 46%, and of course 32. So this is all the stuff that's come through since my last video. So you guys are doing amazingly well. Congratulations to you. All right, let's start off here with some of the data for the recession, the big four indicators since the end of the recent recession, 2020. Now, these four indicators: employment, industrial production, real retail sales, and real income. Remember, this is just the data, whatever you like to call it, whether you're from the US or Australia or anywhere in between. The data is showing that we are looking like potentially going for four green indicators here. So assuming real income, which is set to be reported on August 31st, 5 days away, and remains positive, July will be the first month since April where the big four economic indicators are all positive. So this is probably why we're not seeing a recession. So even though we hear a lot of calls about recession, the big four indicators are not showing it. Now, of course, we had the old definition of a recession in 2022, two straight quarters of negative GDP growth. We saw that in 2022. So technically there was a recession. And so if we're looking for another one in the following year, it's very, very unlikely to happen. The same deal is now getting pushed out to 2024. We're hearing recession calls in 2024. Note that we did have a recession in 2020. So the fact that the media and the masses of people, we just have to log on to some of the news YouTube channels, and that's typically what I keep track of. It's bearish, 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 bearish over and over and over again. The markets are basically up. All I'm here to do is trade the markets. I'm not here to trade the news, because typically we know that the majority of people are absolutely wrong, but the fear sells much better than looking at the data for what it is, and basically markets go up over time. So this is the end of since the end of recent recession, the big four indicators, waiting for this to come in next week. So when that comes through, let's look at doing an update there. Now, the blow off top happening in the 10-year treasury yields, a potential blow off top that is. We're looking at the S&P 500 after 10-year treasury yield at 10-year highs, first time in greater than 200 days. Now, I bring up a lot of these data points because these are the areas that many of you who are watching bring up in the comments sections, and I see them come up because essentially they're at the top of the media target list, and people say, well, aren't you worried about X? And then tomorrow it's, aren't you worried about this? And aren't you worried about this? And it goes on and on and on and on. But then when you actually dig into the data, which the media does not have time for, which the majority of people don't have time for, and from what I've read anyway, the masses of people who then talk about this in a bearish light are somehow pulling it apart in a really weird way. The results are actually quite positive from a lot of these bearish headlines, which basically shows why over the long haul, the markets are pretty much up time and time again. We have big bear markets. They reset the market themselves, and then we have many years of up. Even this area here that many people refer to, you've got the double top and then another crash. The time going up was much longer than the correction itself. But all we hear is correction, correction, correction for years and years and years. But the majority of the time, the market is going up. So it's really a strange phenomenon why people keep expecting the market to fall when over 100 years, more than 100 years, we know this from the data on the charts, the markets typically go up. Now, so going back to this, the latest thing we heard was the 10-year Treasury yield. I've added this to the bull market wall of worry on Twitter. Link is in the video description to go across to my real Twitter and follow there so you can get the wall of worry. Basically, the market's going up and all of the fearful points that the media puts out. 10-year Treasury yield, 10-year high. Aren't you worried about this? The market's going to collapse. Check this out. We looked at this the other day. 6 months later, has a 100% positive return. So in 6 months' time from this signal, which is listed right here, the market has been up 100% of the time. Is it going to remain 100% of the time? Probably not. Probably not into the near future. Is now the time that it's going to fail? Who knows? Of course, I don't have that crystal ball. I'm just going with what the data is saying. And 6 months later, market has been up every single time. If you want to go to 12 months, 7 out of 10 times the market has been up with an average max gain of 13%. Now we've gone through this for nearly 12 months looking at each of these different data pieces on the channel, which you can see in the videos. And time again, these 3, 6, 12 months indicators have shown the market to be up from many of the signals we've looked at. And guess what? Well, the market has been up. If you want to make money and you only want to go long, you want to buy and hold and invest for the long haul, then this is what you need. You don't need the bearish crap that keeps telling you the market's going to collapse because they're on the wrong side yet again. This is sort of stuff that we stress to our members and they discuss it over in their premium Discord channel as well, right down here as a member. So like I said, we've got a sale starting very soon. If you want to see the notifications for that, make sure you are subscribed to our free newsletter. You've got trading guides in there and you can get across to the free Discord as well. I thought this was pretty interesting because we had looked at this on the channel years ago, back here in late 2021, early 2022, and I hadn't taken the drawings off the chart. And this is basically what we had drawn. If you felt like sifting through those videos, I'm sure you could find it. But essentially, we're looking for a breakout above the 50%, and then off she blows to the upside. So yeah, I'm just going to leave that on the chart, see how we progress from this point. But essentially, that pattern has played out. You can see I was using this top, this low, straight through the middle at 50%, breakout, retest, off she goes again, retest to the upper side of this level right here. So that pattern has played out as per what we were looking at back in late 2021, early 2022. Oversold in an uptrend. That's where we currently sit for the SP 500. Essentially, in other words, this is essentially B, T, F, and D. So buy the flip and dip. Essentially, what we see here is the percentage of S&P stocks closing at 12-month lows is in orange. So a percentage of them, if they're closing at 12-month lows, will show up here in the orange. And then blue is the percentage of S&P stocks closing at 1-month lows. 1-month lows are absolutely normal for a correction in a market. If you're getting 12-month lows, that means a lot of the stocks are starting to break down past previous significant support levels. That's what we were seeing through June and October, which essentially marks the bottom. Whereas this time, we're seeing just 1-month lows, correction phase. So this has shown over long durations, there were minimal with fewer than 3.5% of stocks closing at 12-month lows. So essentially, we're looking at the comparable environment here of a bull market by the flip and dip opportunity. Just what the data is saying. If you want to ignore it and hope for another collapse after we've already seen a 25% drop in 2022, we saw a 36% drop in 2020, and you're hoping for another one, then we need to find some of that data to support that collapse. However, the majority of the data is not supporting that. Next, we look at where we currently are at in the choppy, sloppy period of the year. It's the end of summer, August, September, October. Typically, markets go sideways and test some of those range highs and range lows so that we can then progress into the later stage of the year, so into later quarter 4, quarter 1. So providing we see where this market holds up at, then that's going to give us the base for the next climb out. and potentially it could also be good news for Bitcoin as well, depending on where Bitcoin lows to. So for the S&P 500, where we currently are, we've had that move up, 6% down. Remember, we've been talking a long time about single-digit corrections in the market. 6% is where we currently sit. If we look down to the next support levels, or a significant support level down around 9.5%, that's going to take us back to about 4,200 points. And then the last final significant support level at 4,000, mid 4,000, 4,060, 4,050. That's going to be the lows of that April and May period. That could take us out to the double digits. So I've talked a lot about single digits, double digit at 12%. That might possibly be one of the extremes of this move. We don't want to discount any of the extremes, but the likelihood is what I choose to focus on, because that's how I'm trading and investing, is what's more likely going to happen in the market is a single digit correction. We saw a single digit correction into the banking crisis low. Don't forget that. That was about 8.8%. And that was some of the most extreme fear that we have seen. A lot might say, well, now is even more extreme with yields and Jackson Hole Symposium and China woes and etc., etc. But remember, this is the same thing that's happened all the way up at each of these lows, and the price keeps getting higher and higher. Now with the VIX, we've also seen a drop back into the zone, the bull market, long-term bull market zone. That's what we've covered here, and I've got plenty of videos on the channel explaining these bull market zones. And once they get into these zones, we've said before that they can last for many years in this zone. So we looked at the cycle lows coming in, that's for the S&P. We looked at the lower highs forming, and then eventually the breakdown into this zone of approximately 11 to 17. It can go even lower. That just means the volatility is dropping off. But nonetheless, it typically drops into the zone and then remains in this zone for quite a period of time. I wouldn't trade only from this volatility index, but it's a pretty good idea, it's a pretty good signal, pretty good indicator of what's coming next for the market, especially as we continue to grind around between the 11 and 17. So the indicators are still all pointing to the bullish side of the market, yet we keep hearing a lot of the negativity that's out there. Remember, negativity sells better. You're going to hear tomorrow there'll be something else that pops up. Next week there'll be something else again. We can look at the high impact news announcements that come out from the US as well. You know, we'll have more CPIs the next month and the following month, and then the interest rates. It's always something. As for Bitcoin, it has fallen into a downtrend on the weekly. The monthly, as you can see here in the green, is still up. That is the white line here, so that's our swing indicator. It does look a little messy at this stage, but once you get the idea of how the swings work, it does become a lot clearer. The yellow line is the daily. It is up, so we've got the green here, but it looks like a weak move to the upside. So for the downside, 50% is still there, so that's the major 50% at 23,600. So the levels remain as is from previous videos, because we haven't seen much change on Bitcoin this week after those two, you could say, pretty significant days. The first being Wednesday, down 1.6% as it started to break some of the lows. And then when Thursday came in, it's a negative 7%. That's basically all of the movement that we've seen in terms of price. Since then, the market's basically chopped sideways to see if it can hold this level. It doesn't look like it's going to happen. And as we've pointed out before, we're looking like we're in this second phase of the bull market. And what's happened in the second phase before is a break of a monthly swing bottom. So we haven't seen that happen yet. This is your white line, so I've got these out here. It's still in the green. That monthly swing bottom is back here at 24,700, 24,750, which then could lead us back to the 50%. Breaking these is not the end of the world. It's only if we start to consolidate under the significant levels. So if we do start to close under these levels multiple days in a row, weeklies and monthlies, that could then spell more danger and trouble to these lower prices, which I've pointed out multiple times before, I don't think are going to break in this cycle. I believe this is the cycle low. The cycle low is in 15,500, and this particular low here at 19,500, which is the banking crisis low, seems to be pretty solid at this stage. Closing under these levels is going to be very, very bad for BTC. We know from other exchanges, and depending on which charts you are following, which contracts, you can see the price wick under these levels like it has done on the perpetual contract for Bybit BTC USDT. So it has taken out this $24,700 level, come back above it. And so those wicks can happen depending on the liquidity on the exchange. So in terms of the wicks, let's wait and see where the actual closing prices are before we get too concerned with the price of the wick itself. What we also covered with Bitcoin is typically you will see at least 2 red months in a row. This is the, I guess, traditional candle sense that most look at when it comes to, was the month a red month? Not the way we look at it when it has higher highs and higher lows, which July did have. It did close in the red. And for August, with only 5.5 days to go, most likely that we're going to close red again for August. The previous cycle, we had 3 months in a row red. We also saw 2 months again before we got to that final, the final stage, the bigger stage, the pumpier retail bull market stage of Bitcoin's move to the upside. You typically don't see those 2 months again. We got it in that final stage a few months in a row here before the last pump up. But typically in these first stages, you'll definitely see at least 2, if not 3 red months in a row. We had that around the halving in 2016 as well, and then also that first stage of BTC back in 2015 as it was accumulating before that first significant breakout. So that's one significant thing that we've had with the macro look at the market, expecting 2 red months in a row. The other thing was a break of the monthly swing bottoms. We haven't seen that just yet, as I've pointed out, but we've seen it in both previous cycles here. This is your yellow zigzag line here of the TIA Gann swing indicator, which helps us identify the trends of the market. That's how it quickly comes up, as I've shown you here. You got the 1 day is green, the 1 month in this case is uncertain because it's broken the low, but that's of course the perpetual contract. If we stick with another contract here, just the typical index, so a basket of all the Bitcoin pricing, the monthly is still in green because it has not broken that low yet. So we could potentially expect a break of that 24/7, maybe a test of 23/6 because it's looking a little weak here on the daily. So we need those short terms to continue to build up with the longer term. And as for the longer term, you've got here on the weekly, the blue line, that has broken down. You've got lower lows, lower highs as well. So now we just look forward to next week, see where this week is going to close out and keep those targets on our watch list as well for the Bitcoin price. Overall, nothing much has changed for the analysis for BTC. The macro is still intact, the low is still intact. The main thing that has changed is the majority of people's fear from Thursday, the 17th of August, this 1 day down, and then all of a sudden the bears come back telling us that the price is going to go to 15K, there's a possibility of 10K. It happened every single low. It even happened in the bear market. Don't forget, in the bear market at 17, we were told it was going to go to 14, 10, 8, $3,000. At 15K, we were told it was going to go to $10,000, $8,000, $3,000, and then again on the way up. It's going to be no different, probably until we break at least $32,000, and maybe some of those ridiculous low targets will start to get pushed up higher and higher. Don't be a fool. Don't get left out on the sidelines. Hit the like and subscribe button. And if you're not subscribed already, get ready for our sale that will be coming out very, very soon by subscribing to our free newsletter over here. Link is in the top of the video description. Thanks again, guys. Have a great weekend. Follow us on Twitter and Instagram. I'm over here in Paris, probably why the background always looks a little bit different. Other than that, have a great weekend, and I'll see you very, very soon. Peace out.